Hey everybody, how are you today, this evening, Thursday? P2p lending live stream. Hope you're having a great week. God, I look so close to the camera today. I don't know why. That's weird. Am I close? Do I look close to you? I think I'm close. But anyway, more for you to enjoy. So tonight, obviously, going to cover peer-to-peer lending. We're going to look at some of the loans that became available this week, and also look at Loanpad, see what's going on in the Loanpad account. God, I look so close. And let me see if I can check out the camera real quick. I don't know why. Whatever. Yeah, I'm going to look at the Loanpad account, see what kind of activity is going on inside their data feed. Just going to make sure I don't have any boogers, aka bogeys. We'll look at some news. We're going to look at Property Moose, aka the UK Diversified Property Limited. What the hell is going on with them? I am one of the original investors in Property Moose from back in 2015. And we're going to look at Property Partner and, just a bunch of kind of looks at those platforms, see what's going on with those too, and see what the returns have been like over the last few years. One thing I did want to mention today is going to be a new thing, a new guinea pig. If you want to be my guinea pig, we're going to have the ability for you, if you're watching live, to come on the stream. If you want to ask a question, you want to make a comment, or you just want to say hi to everybody, or you can come on the stream with me. I don't know if it's going to work, but if you look in the description below, I've set up a link. It is a Google Meet link, and I just thought it'd be good to have some kind of interaction because I think it's cool, if we can do that. I don't want this to all be about me talking to you the whole time. So if you're interested in doing that, you want to be my guinea pig. You want to be the very first person to come live on the stream, and if you want to do that audio, you can do it with video too if you want. No problem either way. Just click on the link and join, and I'll bring you on here. We'll do it live. So that's what's going on this week. Oh, I do want to also mention, I know on Tuesday I talked about this, but I want to talk to you about security stuff, and just you really have to be careful now. There's a lot of emails coming through that look legitimate, like this, for instance, this email. And by the way, hit the thumbs up if you can do that for me right now. I really appreciate that. But I just want to show you a couple of emails I've had, and I get probably one or two of these a day. For instance, this one looks like it came from Coinbase. Same colors, same font. It's all designed to trick you, and it says your account is temporarily cannot be accessed. And you really have to watch out for these, and it doesn't just come from cryptocurrency fraud. It's also from just bank accounts, stock trading accounts, anything where somebody can get a hold of your information to access it, they will. You can see this one is fake because, first of all, it says your account is temporarily cannot be accessed. So the English is terrible. And also, you can see here if I click on the you go to the from address, you can see here the email. I don't know if you can see that, but it's a bunch of BS. It's at mymts.net. You usually tell these are fake from just where the email came from. So be very, very careful. That's one I got this week. This is another one I got from crypto.com. Again, you can see here the email is serviceinfo.crypto.com, which I don't know if this one is real or not, but I certainly am not going to click on it. I got this view your payroll one that looks like it even came from me, which is completely wrong. It came from WeTransfer.com, which I don't even know what that is. Somebody uploaded a file to WeTransfer.com and in effect attempt to get you to click on it. And then also this mailbox. Your mailbox is outdated. Incoming emails are pending. This is designed to get me to log in so that somebody can take over my email address. And again, looks like it came from me, right? It says message sent to financialthing.com. But if I click on the email address, it's just a bunch of nonsense with a made-up domain name, which again is just a way to phish you and to take access of your finance account. So be very vigilant out there and be careful. It's not something I really talk about a lot on the channel, but since we are talking about finance, I do want you to keep your account protected. And yeah, watch out for the scammers out there, because they are rife right now. They will do anything they can to get a hold of your account, particularly financial accounts. So be careful, be careful. Let's see here. Who do we have on the stream right now? Let's have a quick hi to everybody. Paul in Kenilworth, Colin from the Peak District, Dave Dawson from Staffordshire, Mike Powell, hot and sunny in Southampton. I do look a bit close, says Dave. Peter, sunny Leatherhead. Delighted to say the weather turned out nice for Lizzie's big day. Is it the Queen's birthday? Is that what you're saying? Alan Stratford from the mall. Cripes, it's busy around here. You're tuning in live from the mall. That's pretty cool. Richard McDowell from the Costa del Sol. Nice place to be tuning in from. So let's get right into it. I'm going to try to attempt to make this stream about 40 minutes today. Want to be quick nowadays. This was an interesting article that came from Assets Exchange. I really like what they're doing. I like the sort of the caring nature of these houses that Assets is buying to provide services for people. So this one is a house that was on the platform. I don't think you can still buy it. It may still be on there. But this one is a children's services home that this children's services company was renting it from another landlord. And the landlord said, we want to sell it. So Harmony Children's Services came to Assets Exchange, said, hey, we really want to stay in this house. We offer services to children. Looks like it may be some kind of a foster care or a children's home. So Assets Exchange ended up buying this property and then releasing it back to Assets to Harmony Children's Services. So really nice story, I think, behind the types of projects that Assets Exchange are taking on. It's not always about money, right, when it comes to investing, and I think this humanizes what Assets Exchange is doing. They got this house right here. Has a little interview about how did the partnership start between what Harmony is doing and how the property ended up coming into the hands of Assets Exchange. So let's see if I can find that house on here in the platform. It is really nice to read these kind of stories and get a background, a feel for what these companies are doing, because a lot of the times you don't really hear too much about these projects and why they actually exist. So here's the house right here. You can see that. Is there anything on the secondary market? This is low risk medium. This is the house. Properties, I think it's house number 144. So in Sunnyside, Huddersfield. So it's bought valued for £360,000 on a commercial lease. Lease ends 2032, so a really long lease, and the next break date is 2027 in February. The annual income in it is £25,220, so not a bad yield, in the mid 5% yield. So I thought that was a cool story. Let's go ahead and take a quick look at Loanpad, what they have going on right now. You can see here the live loan numbers has jumped up again now into the 150s, so 152 loans now live on Loanpad, still with that loan to value in the low 40s, so 43%. 1 day estimated time to sell out, estimated time to invest. We still have 9 lending partners. I believe there may be another one on its way. And still kind of hovering around the same amount of lenders, so I'm not quite seeing the growth on the lending side, but average lender, I think that amount has gone up. So it used to be, I think, in the £15,000 range, so people are lending more. It's good to see it. And my strategy now with Loanpad has been to take, I'm invested basically in the Premier account, so with the 60-day access. But what I've been doing is the interest and any capital payments that have been paid back. I'm putting those into the Classic account to have something available if I needed to withdraw some cash out without having to go through the 60-day, without having to go through the 60-day notice. And you can do that in your preferences. By the way, it's very easy if you want to set that up. You just go right into your preferences, and then under auto loan, you can choose which account you want your money to be reinvested in. You can't, unfortunately, do them both, which is just the way the system works, but you can pick. If you have money in a Classic account, you want it to be reinvested in the Premium account, you can do that, and vice versa. So that's kind of been my go-to strategy in Loanpad. Let me pull up the chat very quickly here. 1 second. Let's see here. Turn off the volume. I do like, well, Loanpad is just so steady right now. Just they keep on whatever they put on the tin seems to be what Loanpad is doing. Oh, the Platinum Jubilee. So that's the Elizabeth's Platinum Jubilee celebration. Evening, Robert from Crete in Greece. And Dave says he dropped his holding down in Loanpad as the rate is just not high enough. Certainly not inflation beating right now, but it seems like one of the safest spots that you can put your money at the moment within peer-to-peer lending. So this loan came up this week on Landlord Invest. You have to be fast with these loans because they are so small. So only 75,000, rate of 7.5%, 72% loan to value. First charge risk rating of C. I would imagine these things are just getting funded so fast. So once you get that email from this company saying there's going to be a new loan, you really have to be very fast on the trigger. Let's have a look at what's going on in Kuflink. Let's see. Come on, Kuflink. Kuflink. What's in the select account? I saw a lot of, quite a few loans coming up in Kuflink recently. So we got this Orford Place loan, which is, you have tier 1 and tier 2. So if you want to take a little bit more risk on, you can do that. Rate of return 6.49%. Also, one thing about that I just don't like about Kuflink, and this is really a small gripe, but when you try to invest in one of their loans, it gets automatically defaulted into pay on maturity, whereas you're getting 0.19% to pay on maturity versus if you select on the right pay monthly at 6.3%. This is personally what I always do because I think if you're getting paid monthly, it definitely is reducing your risk. Every time you can reduce your loan amount if one of these loans goes into trouble. I mean, not the end of the world because generally Kuflink loans seem to be okay, but I do like to take the payment monthly versus pay on maturity because I just don't think 0.19% it's worth that little bit of extra risk. But you have, let's see what else is on the market. So you have quite a few loans if you're looking to deploy money. Kuflink right now has, let's see, 1, 2, 3, 4, 5, 6, 7 loans available. Different tranches. Some are in tranche 1, 2. This one's in tranche 15. 7.22% return rate. So yeah, plenty of places for you to deploy money. This property has a gross development value of £4.4 million. So this is a relatively big loan. But if you do want to invest some of your money, there are loans available in Kuflink at the moment. Here's another one, came out this week, Invest and Fund. Again, this one went very, very quickly. It was only £110,888 of a total facility of 2.4 million. So again, these things are being released in tranches. This was number 8. This is in Reigate. Looks like a pretty interesting project, but you got to be fast. Again, that one is not going to be around quickly. They're just such small loan amounts. There's too much money going after these small loan amounts. Oh, incidentally, if you want to get a chance of £250, Assets Capital has a survey which you can take, and I'll put the link in. So just fill out the survey and you will be in the running for £250. I don't know if you actually have to be an Assets Capital investor to win that cash, but I'm going to go ahead and shove that in the link right now. Survey, win 250 squid. Oh, come on. Let me paste. No, it's not letting me paste. Let's try that one again. No, for some reason my software is not copy and pasting, but I will put it in the description on the video once the stream ends. Always technical issues. We've had news-wise, Richard Lloyd takes over from Charles Randall as the FCA chair. This guy looks like he is very close to government. He looks like a government guy. He looks like an MP. Richard Lloyd, OBE, has become interim chair of the Finance FCA, Financial Conduct Authority. He took over from Charles Randall. I'm presuming this is Richard Lloyd. Blah, blah, blah. Not the most interesting of news, but something to pay attention to. Peer-to-peer sector smashes milestones in 2022. We had some profit releases over the last couple of weeks from some of these peer-to-peer lending companies that have actually done really well, and their profit levels have been high, which is very, very positive news considering what we've had over the last couple of years, which is sort of dismal information. And I see Mike saying it's an Amazon voucher, not cash. So, okay, Amazon, if you want to win £250, go ahead and fill out that survey. See how I do everything on the fly. But yes, peer-to-peer sector smashing milestones in 2022. Assets Capital has the largest retail-backed peer-to-peer loan book at £1.4 billion. That's a big loan book if you think about it. I mean, not in the grand scheme of banking, but for peer-to-peer lending, that's pretty big. It has facilitated £7.8 million so far this year, comparing with $27 million lent out last year and $47 million the year before. So kind of on the smaller side, because obviously everything has kind of been on pause with the Assets Capital, but you are starting to see the loan stuff start to ramp back up again. But if they continue on this pace, it looks like they're going to lend out about half of what they did in 2021, but I think they'll probably really ramp that up for the second half of 2022. So they lent out £47 million in 2020. In second place, Folk to Folk had a cumulative loan book of £508 million at the end of 2021. That has now grown to £536 million. So they've had a pretty good lending year so far. And also, I'm trying to get Folk to come onto the stream live to answer some questions So working that out right now, just be patient. And taking the last place in the top 3, crowd property investors have backed 45.4 million of loans this year. 45.4 million, that's a lot. So crowd property offering a ton of loans this year, taking its cumulative lending figure to 261.6 million compared with this 178 million quoted in 2021 by the report from the 36H group. So they're really leaps and bounding ahead of, we took almost a £100 million increase from 2021. So it's a big increase. Crowd property seems to be really growing their loan book much faster than, say, assets and even folk to folk. Platform lent £86 million in 2021. Investment funds cumulative lending has risen from 161 million at the end of last year to 175 million, and they are poised to hit the 200 million pound mark. So they're growing pretty fast. Kuflink has now lent out 174 million to date, compared with 156 million at the end of last year. So coming up to a 20 million pound increase. Archover cumulatively lent out 147 million at the end of 2021, but its company website statistics page showing it has now grown to 152.9 mil. So a smaller increase for them. Proplen risen from 145 mil to 158.7 mil, while lending crowds lending to date has risen from 89 million to 102 million. Relendex has grown from 82 million in 2021 to 89 million. And then last but not least, high net worth lending is the only one of the top 10 to report flat lending volumes over the comparative period of 106 million, but said its deal flow is likely to improve over the rest of the year. So generally, it seems like everyone is heading in the right direction of these companies, which is really great to see. Big question is what happens as this recession, which I think we're already in, starts to ramp up and kick in. Will this lending flow and this deal flow continue to increase like that? Time will tell. We have the new player in the industry, Plend, which launched, I believe, last month. They are looking to lend about 14 million pounds this year after seeing good demand from lenders and borrowers since it launched earlier this month. I actually have not gotten onto Plend's website recently, but I'm going to log in next week and take a look at their UI and the website and see how the platform works. But I have high hopes for Plend. I think that they're going to do well. They're saying, this is Rob Pascoe, who of course has been on the stream before. He said the end of 2022 is vital for us to test and get the model right. Lending targets this year around 2,500 loans worth about 14 million in loan book size. You have to remember the thing about Plend. You're not talking about big development loans. These are consumer lending loans, and consumer lending loans tend to be smaller. So to get to 14 million pounds of consumer lending loans in the first year will be quite a good accomplishment for them. They say they're putting as much effort into technology and open banking as they can, and the open banking credit model is well tested and has been used for 10,000 applicants to date across our partners, which they're excited about. They've had a lot of lenders sign up for early access. They don't have a shortage of capital. There's just not a lot of investment opportunities out there. So this is a good place to find that stable fixed rate of return. And they've had about 60% of their applications have been for debt consolidation, and the rest for a myriad of reasons like holidays, weddings, and funerals. Hopefully not too many funerals. Let's talk about some profits here. Folk-to-folk profits have soared. They've been increasing pretty big. According to the company's latest financial statement, folk-to-folk recorded profits of 1.9 million pounds for the year ending 31st of January 2022, which is up from 1.1 million the previous year. So they have had a massive year of profits. folk to folk. It was £800,000. That's a big deal. They also are warning that there could be significant clouds on the horizon due to what's going on in the economy, rising costs of inflation, and then the impact of the Ukrainian war. But very good to see that they are in profit. And also easy money here, which I know a lot of you will talk about. Easy money. They have posted results of a total profit of £561,000 for the 12 months ending the 31st of December 2021. So they've really almost more than doubled their profits from the previous year. I think this is just so important when you start to see these companies that have been around for a while turning profit. This is a really good thing because I've always said that it's very concerning that some of these peer-to-peer companies just seem to be operating so much in the red for such a long time. So good job, easy money. Good job, folk to folk. Just reading your chat. Hi, Annabelle in Dorset, my end of the world. How's things going over there? Kind of wish I was in Dorset right now. I bet the weather's nice. Let's keep going. Right now, collateral. This court hearing has been postponed until June 13th. Yeah, if you can hit that thumbs up if you haven't, I appreciate it. Thank you very much. BDO has applied for court permissions to set up the framework. This thing has just been a complete mess, and it seems to be dragging on and on and on. Again, I've written off that I would ever get any money back from the collateral debacle, but still going through the court process. Just seems to be one of those things that's going to take 7, 10 to 100 years to figure out. What are we going to look at? Let's look at Property Moose. And Property Moose was a website that I first invested in 2015. What you could do is buy shares in houses. It was very much like the house crowd. Unfortunately, after about 3 or 4 years of operation, Andrew Gardner, who was the founder, and I have met with Andrew quite a few times. I think he's a good dude. He saw the writing on the wall, decided to pull the plug on Property Moose, unfortunately. And what Property Moose did was they offered people who were invested an opportunity to cut their losses at a discount, so take a loss, get out of the investment, or to roll it into this diversified property company where they grouped all the properties together into kind of this fund portfolio. And they had planned that they were going to hold this portfolio and then draw the rental income, pay dividends. Unfortunately, just things didn't really work out. I think they had planned on listing this thing on the stock exchange to be publicly traded, but that did not come to fruition. So, diversified property company decided that they were going to just try to sell everything and pay out the investors. I mean, this thing has been dragging on for a very, very long time. I actually just texted Richard today, Andrew Gardner, and asked him for an update. So occasionally we'll get these live updates from Diversified Property, United Kingdom Diversified Property Group. And it's just really an update for everybody that has money inside of this investment that is probably pretty frustrated about the slow movement. And what they're trying to do is sell all of these properties on. They had a pretty big portfolio, I think, of over 100 properties. Some of them were financed. There was some issues with some of them, being able to sell them, having enough cash to float, all kinds of things. But if you are an investor, you should have gotten these consistent updates every few months. But just to give you an idea of what's going on in the background, April 2022 says during the month, so I'm talking about during April, they said we've completed on the sale of 23 properties and agreed one new sale. So they are selling these properties on. And it's saying following the repayment of the loan notes, we will be in a position to finalize the plan for the next stage, which is dealing with the equity. This will involve shareholders signing certain shareholder resolutions and approving certain proposals to allow redemptions to take place. What they're essentially going to do is probably offer again some kind of exit strategy for those who want to get out, and you're probably going to have to exit at a discount and take a loss. And what's interesting here is this: we are aware that some shareholders are likely to want to remain invested and to use any remaining capital within the company following the sale of the properties to reduce any losses. So we'll also be offering this solution at the same time. So what this is basically saying is that if you don't want to exit all at once, because maybe it's for tax purposes, so you don't want to take a loss at that particular time, you want to delay taking out your money, that will possibly be a choice. So here there's some rental information about how many properties they have. So you can see here they started in July. This would have been of 2022. They actually had 70 properties under their portfolio that were being rented, and this has been reduced to 30. So and then 28 of those are being let right now. So you can see that occupancy rate has increased. So they're going to be getting revenue in from that as those properties are being sold in the portfolio. Now, I've reached out to the UK diversified property people also. I'd like to maybe get somebody to come on the stream and sort of talk about that business and what's going on with that, because I know some of you are invested in that investment too. So it's been kind of one of those things that's, again, just not really worked out very well. Anytime you invest in something and it turns out to be a loss, that's not great. Speaking of another company that I've been really disappointed in, let's talk about Property Partner. Back in my reckless days of just throwing money at all of these peer-to-peer companies, I would look at a company, I would kind of do my little bit of research. This was back in 2015, and some of it looked good on paper, at least, or in theory, and Property Partner was one of them. Unfortunately, again, this is a company that really seems to have just struggled, and I just don't really see any long-term benefit to stay invested with Property Partner myself. Some of the properties that I had invested shares in have actually sold. They have this 5-year process, so at the end of the 5 years, shareholders vote on whether to hold the properties or to sell them. The big thing that concerns me about Property Partners is they haven't got any new deals coming in on the platform. So in order for a company to maintain healthy and to grow, I feel like you have to have new deals, and Property Partners is just not one of those companies. They've been really stagnant for a long time. That's very concerning to me. So my strategy with Property Partner is just to vote to sell as much as I can, even trying to sell shares on the secondary market and just get the hell out of there. Not saying that I know what the future holds for Property Partner. I don't know anything. I don't know any insider information. But when I don't see a company offering new deals and growing, I do get concerned. And I've seen this happen too many times before, where the writing is on the wall and I haven't acted quickly enough as an investor to pull the trigger, which is what I'm doing right now. Unfortunately, I don't have too much invested through Property Partner as one of my smaller holdings. But I want to show you a couple of things inside my own portfolio. Let me just log in here. I have to count on my fingers because I don't know what the 4th, 5th, and 6th number from my pen are. It's hard trying to talk and figure out those things at the same time. Let's have a look at my portfolio right now. See, let me back up. I want to find in my email there was a couple of properties that sold, and I want to show you what the results were. Let's see here. Property Partner search. Mulberry House. Let's look at this one. No, that's old. Hold on. You know, I cannot find the emails, but I'll just show you what's going on in my portfolio and some of the investments that have not really turned out very well. Okay. It's probably a little bit hard for you to see this, but let's see if I can zoom in. So some of the properties that I have, let's see. Hang on. I want to search by total cost. So I'll take, for instance, this 21 flats in St. Catharines Mews. I put a couple of £100 into this one. You can see here the latest share valuation 101.68p. Average price paid was 98.36p. So this one is just slightly above where I paid for it several years ago. So really not much in the way of any type of return on investment on that one. Unfortunately, some of them are worse. Like this one you can see here in Hastings, East Sussex. 114p is the latest share valuation, but in this one I paid 121.85p. So that one is not a good result. You can see I've been in these properties here for 2,000 something days. So these are not short-term investments. These have really been long. Yeah, you do get some dividends back. This one was average price paid 55.85p, latest share valuation 46p. So I just want to show you as an example of how these things could look like a good investment on paper. You think, oh, I'm buying fractional shares into properties in London, different parts of the UK, right? Property is always good. But this one is a pure case in point of how things actually didn't turn out very well and are in the negative. So yay, good one for that one. There was also one, let's see if I can find it in here. Oh yeah, too, I figured out what the actual return on my entire portfolio in Property Partner was for I think I started in 2015 in March, and it was about 8.15% since March of 2015. So that was the total return, including dividends and also loss of capital appreciation, because some of these again have gone into the negative. So really that works out to be a little bit over, I don't know, 1.5% a year, which is pretty terrible for an investment. So yeah, Property Partners has really been a dud as far as peer-to-peer lending goes. Not happy with Property Partner. Let's see if there's anything else. Of course, if you look in the dashboard, it's going to tell you, and these numbers are not entirely accurate, because I've put in money and taken money out throughout the years. But you can see here my total return is 3.93% according to this dashboard, with a minus £84 capital gain on £1,033, and then £124 of dividends received. But if you lump the other things that I've made also in there that I've also taken out, sold during the period of, what do we talk about, 7 years, a 1.5% return is pretty dismal. So I think this is a example of it's very difficult to know which one of those projects was going to do well and which ones weren't. I just assumed something like this, for instance, Boyd Street in London, would be a good investment. I mean, you look at this, you're in Whitechapel, East London. you think, okay, well, that makes sense. You know, who wouldn't want to rent a nice big apartment like this with a cool bed? But turned out this one was not a great investment, and turned out to be a negative winner. That's the problem with investing in these types of things. You just don't know which of the properties are going to do well and which ones are going to do poorly, because you don't have control over, you know, what happens with these properties. Plus they have financing on them, there's mortgages involved, and it's just kind of a messy situation, which is a shame, because the premise of Property Partner was, you know, kind of enticing, that you would be able to have fractional ownership of rental to get that yield, because we don't all have hundreds of thousands of pounds to be able to just buy, you know, rental properties in different parts of the UK. And also gave really good diversity, because you could buy, you know, places in the north or in the south, wherever you felt like was going to be a good deal. But sad to say, that one just didn't work out. But I wanted to show you that, and so you could see what a disaster that has been. I guess it's not really a disaster if you consider, compared to some other things like collateral, Lendy. That one's not been a disaster, but I would certainly, you know, be happier to be out of there than in it at the moment. 51 minutes. Okay, I think we're gonna wrap it up. I don't think there's anything else. Nobody wanted to be my guinea pig today to come on the stream. If you do, we'll keep going for a couple more minutes. But if you do, you want to be my guinea pig and you want to come on live, have a chat for just a couple of minutes, be my guest, please. If not, we'll try again next week. Let's see if you have any interesting comments. Yeah, look, talk about crowd property. 16.5% loan. Mike says, I think we need Mike Bristow back on. Bit of disquiet at some of their recent changes and lack of communication. See if I can get him on. Robert bought shares in Aston Martin, Lloyd's, and SoFi Technology, all gone up slightly in a short time. Aston Martin, God, I would not want to pay the maintenance on that. Paul Bagworth toe dipped into Lendwise and got rejected from withdrawing £20 of interest earned, as they have a £50 minimum withdrawal. That's kind of sucky. I'm going backwards in the chat. Agree, shares looking reasonable value. P2p sadly does have a habit of black swans appearing. It's so important. Diversified portfolio of multiple platforms. Yeah, you're right. Oh, you know, I know it's a peer-to-peer lending stream and all that, but I do have to check the Trading 212 portfolio, because since I lowered the diversification down to just 6 stocks, it's been way more volatile. It's kind of making my stomach churn. But we got the portfolio from 17,100 up to 17,900. It was actually at 18,100 earlier today. And what I've decided to do, I'm going to take profits now. I'm not going to let everything ride. This Arch Resources, for example, was up 6%, close to 6% today. When it was around the 5.5% mark in the green, I sold some of it off. And I took, I think, about 300 pounds of profit. So I've decided that's what I'm going to do. And then when it pulls back, has a red day, I'm going to invest that profit back in and try to actually be a little bit more of a conscientious investor rather than just sitting and letting it ride. Not financial advice. Don't recommend anybody else out there does anything like that. But this is a test portfolio with real money in it. So, but I'm glad to see this touched over. You can see these funds here that I took out earlier that I sold at the Arch Resource. But Yeah, glad to see the portfolio's finally heading in the right direction. Alan says he's got very lucky, as a current rate of return of 16.68% due to a lucky investment in Golden Hill Fort, which has doubled. That's awesome. Congratulations. I have not had that result. Mike says, I tried calling in, but it doesn't seem to work. Oh, hold on one second. Try again, Mike. Let's get you on here. I think I have to authorize you. If you want to come on, just go to that link. I'll put it in the stream again. Let's get Mike on here. See who Mike is. Hang on, let me pull up the chat. This is a test. I don't know if this will work. Oh, here we go. Hold on. See if this can work. Hello, Mike. Hi, Mike. There he is, the man himself, Mr. Mike Powell. Oh, hold on. Can you hear me okay?
I can hear you, yeah.
Oh, there's Mike in Southampton for everybody that
Hello, Mike.
has never seen him before. How's it going, Mike?
Hi, Mike.
Yeah, not too bad.
There he is, the man himself, Mr. Mike Powell.
I can hear. I think the problem is I can hear myself coming through your speakers. It's just the way it is.
Yeah, because I've got.
Can you hear me okay?
I can hear you, but
I can hear you, yeah.
Obviously, where we've got the.
There's Mike in Southampton.
We've got that strange
where we've
bouncing
got the stream on as well.
How's it going,
Yeah,
Mike?
I have to figure out how to do that differently next time.
I can hear you. I think the problem is I can
I'm wondering.
hear myself.
I think it probably headphones would solve that problem, but.
Yeah, because I've got.
Can you hear me okay?
I can hear you, but
I can hear you, yeah.
obviously where we've got the.
We'll probably have to try again another time, Mike.
Strange bouncing.
So thank you for being the guinea pig. We appreciate that.
I have to figure out how to do that differently.
It's like a comedy show. It was like a comedy show. The joys of testing something for the first time, right? And it absolutely not working out whatsoever. It's pretty funny. But yeah, I would like to be able to have people live to come on the stream and have some interaction, for you to ask questions and see how that would go in the future. I just have to figure out how to do it. I guess you have to wear headphones, because if the noise is coming out, well, you see, if you have speakers on and my voice is coming out of the speakers, it's just going to feed back. So that is the only way, I think, to do it. You'd have to plug in a pair of headphones and not have your speakers on, otherwise it just feeds back like that. So whenever I do a Q&A with somebody, you know, like a Q&A live stream with the guests from the P2p lending companies, it always is, I just have to tell them to wear headphones, because I think Zoom does have a cancellation thing, but I don't know. I'll have to test it out and try it again. But thank you, Mike. Thank you for being the guinea pig. Yeah, that was funny. Anyway, I think we'll wrap it up this week. And we'll be back on Tuesday, all being well, for the stocks and shares stream. Hopefully the Trading 212 portfolio will be tripled by then. I doubt it, but who knows? We'll see. But I hope everybody has a great weekend, whatever you have planned. And be safe out there. Be happy, be healthy. And we'll see you on Tuesday. Take care. And don't forget to subscribe if you haven't. Please. Helps out a ton. Take care. Bye.